I've been in product for about 10 years now, that it's very important to bring in all the stakeholders as early as possible to get their kind of weigh in on the features you're building. Do they make sense? Are they in the right priority? What's the impact? And just bringing in those different point of views as early as possible in the product lifecycle journey.
Hello, we're Global App Testing, and this is Building Globally, Lessons in Enterprise Product Growth. This is the fastest growing, most exciting podcast in product, and we will be looking at every single angle on how you can grow your enterprise product by talking to professionals in some extremely exciting businesses. On with the show.
Hello and welcome to another episode of Building Globally, Lessons in Enterprise Product Growth, brought to you by Global App Testing. I'm your host, Adam, and today we're talking to Sanah Ansari, the Director of Product at Capital One. We're going to be talking a little bit about internal entrepreneurship and getting things done in bigger companies. Welcome, Sanah.
Thanks for having me.
Can you give us a little bit of a quick overview of the software landscape at Capital One and your role and how that all fits together?
Yeah, absolutely. So from a software landscape perspective, Capital One has been going through a pretty extensive modernization effort going back over a decade now, so about 10 plus years. And that includes updating software across the business, every aspect of the business, put it that way. As the director of product sitting within the product function, we work very closely with our technical engineering counterparts. So a big part of our product strategy, of course, is weighing in terms of ensuring that we are working on the most updated, cutting edge software as we build, whether it's expand on existing products or build new products. So as I mentioned, director of product, I lead strategy, execution, and delivery of a B2B SaaS-based cloud platform that now internally does consumer credit bureau reporting for Capital One's customers. So this is the consumer credit bureau reporting in the United States that's government regulated and mandated, and goes out to the three consumer credit bureaus: TransUnion, Equifax, Experian, obviously a critical part of Capital One's business. I lead a team of 10 product managers and oversee about 25 other cross-functional team members.
So just so I understand that correctly, because I'm not super plugged into this stuff, you're reporting on individuals' consumer data to trade union and Equifax and that kind of business, and that is for a buyer that are B2B businesses. Is that right?
No. So I'm glad you asked that. So in the United States, as I'm sure is mandated in many other countries, if you have a loan, a credit card, a retail banking account, organizations such as Capital One, American Express, Citibank, for example, are mandated to report on behalf of each of the B2C customers like you and me, right? Mm-hmm. You might have a credit card, I have a credit card. So my credit card company is mandated to report every month to the credit bureaus to provide, information about me. Have I paid my credit cards on time? Am I potentially in collections or dispute, et cetera. So it's that credit bureau reporting that this cloud platform now does on behalf of Capital One for our B2C customers.
A customer would log in and see the app, and it would help them understand their own credit behavior and summarize what they've done with the credit card. Is that right?
So it goes two ways. So, one, of course, so let's just say I am the Capital One credit card customer. I have, a credit card and I'm using it, and hopefully every month I'm paying my credit card or not carrying too big of a balance. And it's that credit information that Capital One is mandated to report to our credit organizations, as I mentioned, TransUnion, Equifax, and Experian. These organizations collect data on me, not just from Capital One, but any other company that I might have any sort of payment history with, credit cards or banking. They then aggregate this information. It's collected from different companies, then feed it back, as you said, to the respective organizations that are serving up that data. So yes, like Capital One will ingest information from TransUnion, Equifax, and Experian and showcase it in the app. So I can, as you said, log into the app. But that's information that we provided the credit bureaus. they aggregate from all the different places that I may be, I may have banking or credit cards with, and then feed it back to these. So then, yes, and then that information is what I could actually view in the app to see what my credit score is, based on my credit history, et cetera.
Got it. And what is the strategic purpose of having software do this? So in a world before software, I guess we would have been sending letters about and doing it. So there's the automation of the actual movement of information. And then is there a kind of strategic reason in terms of customer acquisition or something like that? Why is it important to have an app?
So this process that I just explained of sending this critical data to the credit bureaus here was being done for a couple decades by a third-party vendor company that was sitting with a physical data warehouse. They would collect Capital One's consumer data, aggregate it, put together the appropriate industry regulated file, and send it to these credit bureaus. So a few things there. One, of course, is the third-party vendor. This is now bringing the functionality in-house, so there's obviously a cost savings associated with that. In addition, rather than just replicating the old functionality that was being used by this third-party vendor, we all know data warehouses are very antiquated at this point. The strategic mandate was, how do you modernize that functionality as you're bringing it in-house? So I would say the strategy was dual purpose, right? From a cost savings perspective to bring key functionality in-house, in addition to ensuring that we were modernizing it in the process rather than just replicating what's been happening for a couple of decades at this point.
So can you then tie that back to the success of Capital One as a company? What's the commercial outcome of the work that you do in the software organization?
From a success perspective, first, it's significant cost savings. So when we first launched this platform, this cloud-based platform in the fall of 2023, so just a couple months ago, we did it for our first line of business within Capital One, which is our auto finance business. They give loans for, if you want to lease or purchase a vehicle. And just by bringing that functionality in-house for that one line of business was $15 million a year of revenue savings. Capital One Auto Finance is one of the smaller lines of business. We're now in flight to do this for the credit card business. That cost savings will be, don't want to give proprietary information, but you can add a multiplier there in terms of the annual savings it will drive. In addition to that, we are working to actually expedite how quickly we can send this data to these credit bureaus. As I mentioned, it was previously being done once a month. We're now working to update it to a point where it can be sent real time. So why is that important to you as a consumer? You call Capital One, you may have a dispute in flight with us. You get that dispute resolved. This may have a positive impact on your credit score. You want that sent to the bureaus immediately. Maybe you're trying to buy a house, get a car or home loan. You want your credit score updated as quickly as possible. And that's where having this functionality now becoming real time, which is more in line with what we're seeing right across the payments industry in general. Everybody wants things done faster, as close to real time as possible. So that's a big part of the success there for Capital One in terms of digital modernization as well.
In your experience, is that what is the kind of driver of modernization? Is when there is a kind of clear commercial argument that you will save costs? Is that the most effective driver of modernization in a business like Capital One?
That's definitely one driver or one pillar. I don't think that's the only one. As an organization, you update your software, there's going to be cost savings, right? And it comes from many, many different perspectives as you look at a large enterprise. It's also in order to remain competitive in this day and age. Your consumers have expectations, and those are changing. I would say rising in some ways. And if you don't stay on the modernization train, for lack of a better term, you are going to fall off, right? And eventually you'll just fall behind. And if you think back, I'm probably aging myself when I say this, but thinking back to some of the bigger organizations 20, 30 years ago, and I don't just mean within payments, just, within the consumer space, Blockbuster, Kodak, Polaroid, they don't exist anymore, but they were, the titans in their respective spaces at the time. But because, they did not see the changing times and think about how do you continue to modernize, And also, if you fall too far behind, it's hard to catch up and keep up just because the level of effort to catch up is incredibly challenging from a software perspective.
It's interesting to hear those businesses mentioned, because I know people who would argue that actually it's very difficult for, legacy players, and I'm not calling Capital One a legacy player, but legacy players in general, to actually modernize at all. They would say, well, Blockbuster did lose all its market share, but actually because of the way the business was set up, because of the internal infrastructure of the business and the fact that they're a public company and they just needed to keep following on a 6-month horizon, the kind of a medium-term profit incentive, they would never have been able to do the necessary work from a kind of leadership perspective, from a transformation at the top of management perspective, to generate a product that was anywhere near as good as what Netflix would come out and create. And it's a kind of challenge for a business where you'll have digital entrants who are software first companies. It's in their DNA. In the UK, not credit cards so much, but the Challenger Bank was led by Monzo, which has a fantastic app, but it's a kind of consumer banking app. Well, do you think, for example, that legacy players are disadvantaged in producing a digital product that's as good as a software first entrant? I mean, what are some of the challenges there?
You can kind of argue both sides of the coin, to be quite frank. Even just within the payment space, I can think of legacy organizations and enterprises that are definitely continuing to keep up, because you have to have the strategic vision to see what's going to come down the pipeline 5, 10 years, and know that part of our investments have to go towards looking ahead rather than just kind of keeping the lights on. I think that Blockbuster example is where you didn't see any kind of forward thinking that people are going to stop coming into the stores to rent videos, and then of course move to DVDs. They got that far, right, to DVDs, and then if you could think of a way to start providing that online, maybe a mailing subscription to start. I'm just giving some examples in their space, but American Express is an example of a legacy company that has continued to keep up. If you think about this, what American Express started as, over 150 years ago, they were a mail company, and look where they are today. But it's because their leadership has continuously made it a point to think of strategically at least X number of years ahead, and know that many dollars in resource and investment also need to be looking ahead to continue to evolve an organization. So I think you could kind of argue both sides of the coin. Then there's also the opportunity that if you think of a legacy company, they have the funding, you can buy, partner, and then yes, you can build, right? And building is often the more challenging route. Netflix started as a very small company at some point. They were not the mammoth they are today. And, that could have been an opportunity for someone like a Blockbuster to think about, like, hey, maybe this is our chance to acquire more modernized functionality or buy it or partner, rather than, hey, I'm going to go and try and now build in-house. You're right. I don't have the software resources and bandwidth and et cetera, because that does take a long time to kind of bring that together and then start building.
If for those players that are kind of already market dominant and or some people call legacy players, but businesses that are the traditional owners of the market, are there any other attributes that you would characterize as being the thing that makes the difference, the thing that it makes you more likely to continue growing even as the market gains new digital entrants?
Yeah, of course, there's, as you said, the monetary investment, the resource investment. I would say leadership's willingness to, one, accept that times continue to change and evolve, and that you do need to be putting the energy and resources towards keeping some portion of your business focused on what's the future of your business, and then taking risks. Right? If your leadership at the top levels are not willing to take any risks, or don't even see any value in taking a risk, or don't even see the changes coming, it's going to be very hard for a company to evolve. In a previous role, I had a client of mine, won't mention my name, but very, very large retail client. And this was going back about 15 years. And they were like, social media is a fad. That's what they told us. shortly after that comment was made in a meeting, and we were all like, our jaws all dropped because they're like, so the social media thing is a fad. It's going to be gone before we know it. We need to focus on our core business, which is brick and mortar. And they had a leadership change within a year or two. So that retail business is still here and they're still doing well because big change in leadership shortly after. And then those, the CEOs, the C-suite started seeing the value and like really doubling down on digital modernization and what did that mean for their business. So they are thankfully still here today. But if they hadn't seen that change and that same leadership team had continued, maybe we'd be having a different type of discussion about this retail client.
I'd love to zoom in a bit now and talk a little bit about the enterprise platform that you've launched at Capital One. Was this your idea? What was your relationship with the initial project?
So this was, as I mentioned, so this was part of this broader, 10 plus year core modernization effort, which is looking at all different aspects of the business and thinking about one, obviously, as I mentioned, what can you bring in-house to drive, revenue savings, but then how do you do that in a way that's keeping up with more modernized technology, which also leads to additional cost savings. For my part, I came in once the initial strategy had kind of been mapped out, just because that's when I joined the organization and joined the team as well. There have definitely been some changes. So, you have an initial vision and strategy, and you're like, that's the end goal for MVP. The road is never straight from A to Z. So there have been along the road, strategic decisions and changes that we've had to make to ensure, one, that we're meeting regulatory standards, building in the most efficient manner, even technology that has changed since the strategy was laid out in 2020 and 2021, which was, a couple of years ago. But no, I was not part of the initial kind of strategic decision and as that vision was being laid out.
And is the pattern then that there are modernization initiatives that happen on a rolling basis, and every few years they turn around and they go, okay, we've got to modernize again. What do we think is the next vision of modernization? Is that the sort of planning framework? Am I getting that right?
It's never as clear cut as that, that would be ideal. But yeah, that's essentially, as I said, because this broader initiative for the company has been going on for 10 plus years, but that's exactly how it's been. Like, as they looked at different parts of, a large enterprise, you can't do everything at the same time. So, what are the most pressing priorities? So let's focus on that. Now those are completed, and like now start thinking about the next. And then, as you said, like kind of like on a rolling basis over the last decade or so.
It strikes me that it's a regulated industry. It's a large company. There's going to be a lot of stakeholders, and there's going to be a long road between the initial conception of what the change should be and the actual outcome that reaches customers. Can you tell me a little bit about how you navigate the process of managing stakeholders, managing different inputs on the product, managing what the outcome should be?
Absolutely. And I have experience in this role as well as prior roles within the product space doing so. Current role, I would say it's been one of the first things that I did was understand who were my different line of business internal customers above and beyond just auto finance, right? Auto finance was on board. They had already been sold into this, we were moving forward. But really started to think about building relationships with those additional stakeholders and commercializing and socializing the roadmap that we had built to start to gain additional inputs from other stakeholders to ensure that we were trying to incorporate as quickly upfront as possible just to avoid future potential rework. And those stakeholders are not just, the credit card business or the retail bank business, because of course we want them to be using this platform too. Legal, compliance, risk, those type of stakeholders as well, right? Without these key functions being brought in early to understand like how we're building the technology, where they see potential risks and issues or regulation challenges, you don't want to be building so far down the road and then at the 12th hour bring in these key stakeholders, because it could mean significant delays, rework, things that they will, and these are usually your stakeholders who are going to sign off, right? And without their sign off, you're not launching any product on behalf, such a large organization. I've been in product for about 10 years now, that it's very important to bring in all the stakeholders as early as possible to get their kind of weigh in on the features you're building. Do they make sense? Are they in the right priority? What's the impact? And just bringing in those different point of views as early as possible in the product life cycle journey.
I've heard people say that if you have too many stakeholders, then it can just kill things. And it's almost better to have a few stakeholders and make the decisions and kind of bring the other people in at the end if possible, or basically not to try to design too much by committee. And the idea that designing by committee kind of kills features, kills products, kills piece of art. What do you think about that?
It's a fair point. There's definitely a balance. You bring everyone to the table on day one, you're probably not going to get very far. I think it's being strategic about who you bring in when during that product life cycle. I think what I was referencing earlier is I have seen products just not get off the ground because it was built, and at the 12th hour, then they were bringing in the key stakeholders. And then there was just so many delays because there's so much rework and so many changes that had to happen. But I think you have to definitely phase in absolutely stakeholders at different points of time, just depending on what the strategy is, the vision, and then determining like maybe there's a certain part of the business you want to focus on first. Let's go talk to them. Or if it's an external type of customer within a certain industry. I've launched products before that were focused on travel and entertainment. We went to go speak to those clients first. We did not go to the retail clients as an example, right? So you kind of think about what is your mission, vision, and then who are the right stakeholders to kind of bring in at the appropriate time. But I agree, if you bring everyone to the party on day one, it's going to be extremely challenging.
This launched in September 2023, right?
It was actually November.
November last year. Okay, cool.
Just like 6+ months, yeah.
Yeah, and okay, so you're working on it since 2022-ish.
I started on the in this role in early 2022. In some initial build had actually started in 2021. I probably joined within a few months after the build work had just kicked off.
If you were being hired into the same role, but like right now, is there anything you would do differently?
Yeah, hindsight is always 2020. Absolutely. I would say the first thing is when leadership and the appropriate folks were sitting down to draft the mission, vision, the strategy, going back, probably 4 years or so at this point, to really vet out a lot of key decisions before diving into build work. So the example I'll give is I mentioned real-time reporting to you earlier, right? So this means real-time, you call customer service or you go online, maybe clear up a dispute, and we're, shooting something to the credit bureau within minutes, right? That's truly real time. We're not there yet, right? And there's not just because of the technology that we've built, the credit bureaus are not enabled today to accept real-time updates. Now, this key decision kind of dictated how the platform started being built, going back to 2021. And we learned, some point in 2022, I came into the role. I built contacts at the credit bureaus. We had a lot of good investigative conversations. Those conversations that I had in mid to late 22 should have happened before the build work started. And we had some rework. We were delayed. Like this platform was supposed to launch early 23. We ended up being almost 6 to 9 months late because of the rework that we learned, just because of some key decisions that leadership had made that were never kind of fully vetted out before we kind of dove into the technology build work and execution.
Is there, it sounds like if you're part of an ecosystem and some of the key partners in it aren't actually ready to modernize, or you have to modernize in lockstep and together, that it's actually a bit of a killer for modernization programs, right? What would your advice be for, or like if you were a CEO, say, and you were in an ecosystem where you needed the modernization activity from the partners, is there any advice you can give, or any thinking that you've done around like what to do in that situation? Is it just a case of like knowing the limits and investigating early, or is there other things that an individual company can do if there's stasis in the ecosystem?
Well, if I was a CEO, a little bit different than where I am today. I think it's important that the mandate that's coming from up top
Mm.
truly flows down all the levels of leadership. So you don't get the pushback that we sometimes experience when we're talking to other lines of business. They're like, well, we're still thinking about it or looking into it. But if that direct message had flown down from CEO to, their direct report director all the way down is like, this needs to be done by this date, rather than kind of giving line and business leaders more autonomy. I
Mhm.
think things would probably move in a slightly faster fashion, more efficient fashion. And by efficient, I just don't mean time wise, resource wise.
Mhm.
We've had internal discussions with other leaders at different parts of the business, and they're like, well, we're assessing building a different tool. Now, if I'm the CEO, does that make sense? Because you've just invested all this money and resources for this platform to be built. Makes sense for it to just be adopted with the changes required, right, for the respective lines of business.
Mhm.
Um, Rather than finding out that another line of business thinks they should invest more money, build, and from there, of course, extend out their timeline to drive that same modernization.
When you're this kind of modernization program, right? You're describing something that's a 3-year
Mhm.
cycle. The
Or
the
longer, right? Depending on the build effort, et cetera. Yeah.
Absolutely. There are people who would go, well, in software, what we all have to do is iterate, and we've got to launch the tiniest releases that we possibly can and gather feedback and continue to make things better slowly over time. Do you agree with that, first of all? Do you feel as though the this kind of centrally planned slow model is limited, or do you think that actually you can get to a similar place? What are some of your reflections around that?
I think it's a balance between trying to wait until the product is or platform is, has all the features you can ever envision, and you're waiting for years to get something launched,
Hmm.
versus it's being done in such tiny increments that it's slowing down the progress. I think there's a balance between the two. Um, Testing is important, and features should be tested as that should be in an iterative fashion. But when you think about the roadmap and the cycles of product releases, it definitely should not be everything needs to be completed. So what we had launched last year, it's MVP, minimal viable product. Now, next phase. Now, where do you go from here? Well, now you're adding other key features, functionality that maybe these other lines of business within the organization now require, but to do it in a iterative fashion to the degree that you're not hampered where you're going through a release process every month, because that's also takes time, right? Some of these
Hmm.
internal processes to get products and platforms released also add a lot of overhead. So you have to kind of be conscious about weighing, ensuring you're testing adequately, but then not kind of going through a lot of these internal release processes repeatedly, because that just takes away a lot of time and effort from the core part of the business, which is getting the product built and live.
We've gotten MVP live. We're releasing the next generation of it. How much can you share with us about what the vision is there?
I would say the next phase involves adding some key functionality that is required for another line of business.
Hmm.
So within the payment space, even credit bureau reporting differs, the requirements that you have to report for an auto loan customer versus a credit card customer versus a checking bank customer, right, for example. um, so the auto loan customers actually have the least required information. From
Hmm.
there, building on that, so now the next phase is thinking about these other two large businesses that we have within Capital One. How do we get the required functionality to ensure that we would be accurately reporting data to the three credit bureaus on behalf of their customers,
Hmm.
and doing so in a way that we can ingest from their respective data sources, because each line of business has their own data source that we're working on. So accurately ingest the data sources, put it through this platform, and then create the right output that's being sent to the credit bureaus. So that I would say that that's now in the next phase of this platform.
Payments and credit bureaus. Do you think the industry is changing? First of all, I mean, I think that credit bureaus, and maybe you'll agree with this characterization. I'm not sure. I recently bought a house,
Mhm.
and I found that part of it, which I'd never really engaged with before, I found it surprisingly old-fashioned, I would say. You agree with that as a kind of characterization? Do you think that the market's likely to change? What do you think's going on there?
I absolutely agree. And I think that's a big part of what this platform's trying to do for Capital One, right? Like, while we're not at, so using you as an example, I'm assuming got a home loan of some sort.
Mhm.
And if you needed your credit score to be updated before you got the best possible loan rate, you'd want that to be done quickly, right? Like, you don't want to be now like telling, oh, I have to wait another month before that score is now updated. So that's a big part of the faster real-time aspect that customers are hoping for and expecting. Now, are there parts of I would say, like the finance industry that are well behind, including some loans where you're seeing, we recently leased a car, the amount of papers, like actual paperwork that printed papers that we signed, rather than here's an electronic copy, read through it, just giving that as an example. So we sat at the dealership for hours just signing papers. So that's just, like a very simplified version of where there's definitely continued need for modernization in different parts of payments across the board. I think consumer day-to-day payments has gotten modernized a lot faster, Venmo, Zelle, etc. But there's aspects of, because they're not everyday payments, like, you're securing a home loan or a car lease, you might do it once in your lifetime, a home loan, or twice. I might do a car lease every 3 to 5 years. Those are going a little bit slower because they don't have as much, I think, repeat usage. So maybe companies don't feel as much of a need to invest as quickly there. Because once you secured your home loan, you're probably like, okay, I'm good for a couple of years now.
and probably if you're securing a home loan, the actual mortgage rate is going to be the thing that really drives your behavior. Whereas if you were choosing, so to go back to Monzo, I have my old traditional bank that my salary's paid into, and then I forward myself a spending budget with Monzo. So I'm just getting advantage of the Monzo features, but that I'm using it just at the point where money management is what I'm excited to use. Whereas if I was buying a mortgage, I mean, the way that my screening behavior there was that
it's going to be very different. Yeah. And that's where, your screening behavior, your engagement with that payment product, right? As a home loan is essentially a payment product, but your screening behavior is very different. You're not looking for convenience. You're going to look at, you're absolutely right, the mortgage rate it's what's going to drive your decision making, rather than like, well, how quickly was I able to secure my home loan and make a payment, is going to be less so, versus when you're making your daily everyday spends. It's more around the convenience and speed of it.
Fantastic. Well, thank you so much.
Building Globally was brought to you by Global App Testing. To find out more about how best-in-class functional and UX testing can help your product grow, head to globalapptesting.com. If you enjoyed what you just heard, click follow on the platform you're using right now. Building Globally is available anywhere you get your podcasts.